given the scandals, all the controversy in the White House, how confident are you that Trump and the administration can execute their plans, whether that's tax reform or infrastructure spending?
I think everybody's sort of adopting a bit of a wait and see, and that's part of the pause in the market, and I think part of what explains the lack of activity. The administration came out with a very bold agenda. Repeal and replace Obamacare, introduce major tax cuts, redo trade negotiations across NAFTA, China, the European Union, reassess NATO and defense spending, reassess climate change and the implications for the U.S., encourage companies to bring jobs back to the U.S. rather than offshoring. I mean, this is a world of legislative and regulatory change potentially. And not surprisingly, for a new administration, it's been tough sledding. I mean, they've had to get their own house in order, so to speak. And I think the disappointment of the replacement to Obamacare, the fact that there was more work done, frankly, on the repeal than on the replace, has sort of set back the agenda a little bit. I mean, listen, for the broader economy, we hope the administration can pull some of this stuff together, because we need progress on some of these legislative programs.
Are you concerned about the U.S. economy?
No, I'm very encouraged about the U.S. economy. The sort of dirty little secret here is the U.S. economy is doing just fine, right? We're at almost full employment, 4.6%, I think, unemployment rate. There's very little inflation, but we're starting to see early signs of it. We've endured 2 rate increases and expect to have more. The consumer debt is a little high, but housing prices have recovered from the crisis. State and local government deficits are under better control. So the U.S. economy, I mean, if you look at it objectively, the U.S. economy is doing fine. Not great, but fine.
There is that political risk. Do you think markets are not pricing in that political risk? Are they looking overvalued now, U.S. stocks?
No, I don't think they're overvalued. I think, they're obviously trading at relatively high multiples, but look at the earnings. I mean, I don't know the exact earnings numbers coming out of the last quarter, but I think they're up 10, 12% year over year. That's pretty sporty, right? So you've got to look at the market reflects the NPV of future cash flows, not the past. And the future cash flows are suggestive of a growing economy. And in that environment, people are surprised the markets reaches all-time highs. I like to point out, by definition, with the same multiple in a growing economy, every day you should reach an all-time high. That's not a surprise. That's an expected outcome. So the question is, are we getting there because the multiples have been inflated, or are we getting there because earnings expectations are growing, or are we getting there because there's just a lot of froth in the market? And I think right now, I don't see tremendous upside without further confirmation of the earnings story, but I certainly don't see an overvalued market at this point.